Here is the scenario. You've worked hard and saved diligently for your retirement, but then you find a hidden mistake in your retirement planning that could cost you hundreds of thousands of dollars in unnecessary taxes. I spoke with financial planner Abe Abish on how to avoid that costly error. Abe is the host of Retirement Key Radio and the founder and CEO of Abish Financial Services. He and his team serve the D.C. area by creating retirement strategies with clients' needs in mind. Abe, it is so great to have you here on Great Day Washington. A mistake in retirement planning could cost us money, and we're not talking about thousands of dollars, right? But hundreds of thousands of dollars.
Potentially, yes, Kristen. Proper tax management is key in retirement planning. And so tax planning is one of, 5 or 6 pieces in a comprehensive, holistic retirement planning. And if you're not addressing taxes or tax planning on your retirement dollars, you're missing a key piece, right? Today, tax rates and tax brackets are low. And if you ask 9 out of 10 people out there if they thought that taxes would be higher in the future, almost everybody would say that taxes are going to be higher. So what are we doing waiting and just hoping that taxes are going to be lower in retirement? We need a plan for this. Taxes are our biggest expense in retirement. So we need to have a proper tax plan and strategy as part of a comprehensive, holistic retirement plan.
Is this just something that wealthy investors need to be concerned about?
No, absolutely not, Kristen. Everyone needs to be concerned with taxes. Again, tax rates and brackets are at all-time lows. They're almost only likely to go up. Our country's national debt is almost at $30 trillion. Right now in the works, the tax code is in the works to be changed. Corporate rates probably going up, capital gains tax is probably going up. The whole ordinary income tax system for most people is going to go up. And if it doesn't go up over the next few years, it's certainly scheduled to go back to what it was before 2018. In 2025, it's scheduled to revert back to the prior tax code. That means everybody's tax rates and brackets will go up. So, Kristen, you can either decide to pay taxes now or pay taxes later. And I don't know about you, but I don't want to hope that taxes are lower in retirement than they are today. I want to actively plan, proactively plan.
Right.
We all want to pay our fair share, right? But we never want to pay more than we need to. We just want to pay our fair share.
Absolutely. I mean, you think taxes are everywhere, so why is tax planning often overlooked? I mean, you would think that might be one of the first things you're thinking of.
Exactly. You know what? Most people tend to focus on just their investments. But if you're just focused on your investments and you're just focused on rate of return and the growth of your investments, you're really missing the boat, right? Because taxes are our biggest expense in retirement. So what sense does it make if you're earning, 10, 15, 20, 30% on your investments, but then you're losing 20, 30, 40% to tax? So, most advisors out there, most firms and most people tend to just focus on investments. And investment management is, believe me, a very important part of a comprehensive retirement plan. But taxes are also a very important part of a retirement plan. So we can't just ignore taxes. It's easy, Kristen, to just talk about rate of return, to just talk about, oh, look at all my, high-flying tech stocks. They're doing so great. And I was up 60% last year. But if taxes go up down the road, we could lose more money to Uncle Sam than what's in our pockets.
We don't want to do that. We want to keep as much of it as we can. Now, tax planning can help us keep more money, but what about income planning? Why is that combination so important?
Yeah, tax planning and income plan, they go hand in hand. They go together, right? Income planning is the foundation of a retirement plan. Think about this. You've worked all your life to make sure that you've saved enough money for retirement. At some point, you're going to say, Abe, Kristen, I'm tired. I've had a great career. Now I want to go enjoy the rest of my life. Well, you need to make sure you have enough income coming in for the rest of your life, adjusted for inflation. You need to make sure that income is not volatile, that it's not all dependent on the stock market. And, every 2 weeks, you get those paychecks deposited into your bank account when you're working. That's the same type of paycheck you want to create in retirement. So an income plan is the foundation of a strong retirement plan, Kristen.
Such great things to think about. And you have something for our audience at home today, right?
I do. For the first 5 callers that have investable assets of $500,000 or greater for retirement, I'd like to personally invite them into our office where my team and I will help them put together their own very own roadmap for retirement, a retirement roadmap. And Kristen will do that on a complimentary basis.
Amazing. A roadmap with no tax surprises at the end, but it's always great to have a good plan. And Abe, thank you so much for bringing all of this up for us.
You're welcome.
For you at home, you've worked decades to get here, so Abe wants to help create retirement strategies with your needs in mind. That's right. That's why right now, for the first 5 callers who have investable assets of $500,000 or greater, he is offering a complimentary retirement roadmap. This game plan will look at your income needs, investment planning, Social Security, RMDs, taxes, and more to help you complete your journey to retirement. The number to call is 571-322-8373.